Two big things in the markets this past week. Number one, the Fed lowered the Fed's funds rate by a quarter point. And then number two, the S&P 500 is right there. It's so close to all-time highs. So I want to show you a chart of the S&P 500 and then also, secondly, show you a chart of what could be an indicator of what's to come for the S&P 500. So it's pretty interesting to look at that, to look at both of these together. So first, let's jump into a chart of the S&P 500 and look and see how it's finishing up for the week. And here's a chart of the S&P 500. Each one of these bars, vertical bars, represents 1 week of trading, and then we have an oscillator down here. So first things first, what I want to show you is we are so close. Look at this. The market hasn't quite closed on Friday when I'm doing this, but it's about 11:45 on Friday. So up a little bit for the day and for the week, basically flat. But you can see right here, we're edging up against this high, against this recent high that was put in back in July. And we'll see if it can break through to the upside. Now, the longer that the bulls can hold it up here without any sort of pullback, the better off it is. And so we want to see if, in fact, when the S&P 500 does approach these trend lines, how it responds. So right now, it looks like it's pausing at resistance, and we'll see if they can break through to the upside, maybe even today, later today in the afternoon trading hours, or we'll see if next week how it shapes up. And this is the chart that I wanted to show y'all about maybe an indication of whether or not the S&P 500 is going to break out to new highs, and if so, if it goes very far. So here's the thing right here. What we're looking for, this right here is a measurement. We're taking the consumer discretionary sector and we're dividing it by consumer staples. And so if in fact a rising line is healthy and a falling line is not healthy for the markets in general. And it's fundamentally that makes sense, because if the discretionaries are doing well, people have extra money, they're spending it and so forth. And if not, they're tightening up, they're only paying for things that they need to, such as those items in the consumer staples index sector. All right, so let's look at this. What we're looking for are divergences in price is the main thing. Not so much a price level, but divergences in price. So for example, what we see right here is we see a high in the oscillator. We see a high in price. Good thing, okay? That all lines up. But then we see a high in the S&P 500 and we don't see a high in the oscillator. Then secondly, the same thing. Now, is this third time a charm when we see a larger pullback? We saw a pullback right here. And then also right here, we saw a larger pullback when the S&P 500 was just going up, 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 up. And the oscillator, we just couldn't break through to the upside. And we saw a relatively large move to the downside. And then again, this oscillator was useful in showing that, hey, look, everything is not so bad right here. We do have a divergence. This one is a positive divergence where price went down to a lower high, and then, or excuse me, lower low, and then the oscillator itself made a higher low. So we'll see if that can, if this is a signal for lower prices ahead. But it certainly is a warning sign for the bulls in this area right here. Yes, the momentum has definitely slowed on the weekly time frame when we look at the weekly time frame, and so we're seeing a lot of divergences, whether it's the bullish percent index or the consumer discretion versus the staples, the chart that we just got done looking at. So yes, there are some divergences there. The good news for the bulls is that the longer term, the 12-month momentum is still positive. So that is really, when we look at is it like bull or bear market, we're really looking at the longer term 12-month momentum. So it's good for the bulls that that's still positive. On the shorter term, on the longer term, we're going to see some more need to see some more bearish price action for that to turn negative. And the market, the S&P 500 it's basically on highs right now. So as long as it can continue to do that, then of course that's healthy for the markets. I mean, by default, right? Rising prices. So another thing to note is that the value stocks are starting to outperform growth stocks on a longer term basis. So that's something to consider when you're reallocating. And that the growth is still, or excuse me, small caps are still underperforming large caps by a relatively big margin. So on the longer term, on 12-month scale. So, all right, with that, we'll be watching it closely. Going to be interesting week coming into the S&P 500. We'll see if it can break to the upside, or if in fact those were valid signals that we're going to see a down week this week coming into on the S&P 500. All right, so hey, look, if you like the videos, like it, subscribe if you're not subscribed, and we'll talk to you next time.